Today is Thursday, the 17th of December, and this is Frontier Opening Bell with Joshua Odebisi, banking sector analyst at Vertiva Capital Management, and Akintunde Sulaiman, also from Greenwich Merchants Bank. Thank you, Akintunde and Joshua. Good morning. Good morning, gentlemen. Thank you very much for coming through on the show today. The big story across the markets was that the Nigerian market continued to rally for the third day. It looks like between the banking, insurance, consumer, and industrial goods, that's where the play really is. So the 35,000 index remained stronger yesterday by 0.7%. But the stock market in Ivory Coast was much stronger by 2.30%, while the Egyptian, the Kenyan, and the South African market softened by those margins on the screen. So we're starting from Nigeria today with the big story around the land border being reopened on the back of the announcement by the executive branch. 4 of the land borders is being reopened, by the way, not a wholesale reopening, unlike when it was shut down in August of 2019. Yesterday, the central bank issued additional guidelines on diaspora remittances and threatening to revoke the operational license of any international money transfer that flout the recent guidelines regarding diaspora remittances into the country. We got results of the debt management auction, the final auction for the year, yesterday, and of course the central bank NTB, that's the Nigerian Treasury Bills auction. 364-day bill dipped to 1.1390%. Niger Republic is digging for gold like Nigeria is doing down south. 5 new gold exploration licenses have been issued. And a small startup in Senegal, Olusola, says he's been able to raise $5.8 million in Series B funding. Congratulations to all of you who are startups in Africa, raising funds and giving us a good measure of hope when it comes to small and medium enterprises. But let's start on the land border closure. Joshua, let me start with you. How is this news being received at your end?
I mean, obviously, it's a bit of a mixed bag, mixed feelings about it, just due to the fact that, on the one hand, I would have said from the very beginning that, I think not that many people agree outside of the government agreed with the rationale behind the closure of the land borders. They gave various reasons for it. They said insecurity, they said proliferation of arms, they said smuggling of illegal this or that would improve the agricultural sector. None of these things materialized. If we go through them one by one, you see that insecurity has gotten worse since the land borders were closed. We see that proliferation of arms. We've heard stories of arms being manufactured in the northeast. So it wasn't, a case of them even just being smuggled in. Now they're being manufactured within our borders. Then you have the agricultural sector. The truth is that on the one hand, the lack of adequate supply has led to a pretty significant jump in food prices across the board. And on top of that, we've seen, reports about the poultry sector, for example, poultry farmers complaining. At first, they were saying that the closure of land borders would help their businesses. I guess, it would stop cheaper poultry coming in from other countries. But at the same time, now we're hearing that the poultry farms are on the edge of collapse. So that just tells you that the border closure was never going to be the solution. If you don't have proactive measures that are going to improve the conditions within which people are operating in Nigeria, protectionism doesn't work that way. Negative protectionism, banning things, raising tariffs, things like that don't work. They just lead to, an imbalance, and really it has created a situation that nobody, I think, would call an improvement over what was happening before borders were closed. So this, they call it a step-by-step reopening. They've reopened 4 specific land borders now. I think what we really need to do is just, go back to, the AfCFTA is coming online next year. So, all borders need to be opened anyway. and what we need to do in order to ensure that we are not overrun by cheaper imports from neighboring countries is to improve our production, to put policies in place that would actually help our farmers and help local production to compete. Because if we can't compete, then protectionism is not going to work. And I think that this has just proven that.
Suleiman, can you weigh in on this for about a minute as well? What are your thoughts?
Yeah, just like Joshua said, I mean, Nigeria is not a self-sufficient nation. We depend on resources from other neighboring nations and those even far away in terms of input for consumption and what not. So it was more of a bane on the economy than a virtue, because you say revenues that the government ought to have accrued from those imports and couldn't were short. And as well, you see what has been happening with food inflation month on month. It has been skyrocketing due to shortage and in supply, lack of supply of those commodities that Nigerians will consume on a daily basis. We saw rice move from about early 20s to late 30s, and with the border gradually opening up, we expect and we hope that this will ease food inflation going forward and headline inflation generally, and this will as well see more of those staple prices ease going forward.
So with the central bank coming through with additional foreign exchange guidelines yesterday as far as the IMTO is concerned, Joshua, what do you make of that directive?
Well, okay, so I think in general, I'd say that obviously the situation with regards to FX and FX remittances and payments, all these things, they're not a long-term solution, obviously, due to the fact that if we are not able to actively source pretty significant FX that would sort of balance out the demand in the country, then we're going to continue to see these kinds of stopgap policies being issued. And that's exactly what it is, a stopgap. Because overall, what we've seen recently is that, people are just looking for creative ways to get what you'd call their fair share. Because the truth is, importers will tell you, importers and exporters will tell you that, they're having to do things officially. Okay, so for example, I know the company that has to source its local products at the black market rates, and then when it sells, because of the directives and because of the policies of the CBN, they have to sell at the official rate. So they're making a loss, no matter how you look at it, because they're sourcing dollars at 450 to buy the local products, but they can't sell at higher than the official rate. So these kinds of things are going to just discourage production and discourage exports, because there's nobody in their right mind is going to be entering into a loss-making business for any reason. And so things like this are going to continue to happen, and directives are going to have to continue to be put in place, just because people are not encouraged to try and go out and use the normal channels to source or transfer funds. And so unfortunately, it's just creating more and more
more holes in the pocket.
Not just more holes, it's creating a more difficult environment in which businesses can operate and within which individuals can operate, and unfortunately that has become the reality.
You give a very valid point there. If you source for raw materials input at the black market, when you do the exports, you bring in the dollar back in at the official rate, the gap in between, you're not getting maximum benefit of your sweat and your efforts, by the way. So that's one big issue area that the government needs to look at. Yesterday, the news came in that Ghana's GDP contracted 1.1% in the third quarter. That's quite a hit, isn't it?
Yeah, for the Ghanaian economy, they're a commodity-dependent economy as well, and because a lot of their production deals in or a lot of their goods, it's highly dependent on exports to developing nations. For example, the cocoa, the gold, oil as well. So it's no surprising, because if you look at cocoa, they've been having challenges in exporting due to increased protectionism across economies. So a lot of commodity dependent nations have actually been taking a beating from the impact of coronavirus, and as well every other economy trying to curtail the viruses across the virus across the economies. As well, production levels has even decreased significantly. I was reading sometimes last week that chocolate producers have not even been producing as much, because holiday shopping has not been happening, and a lot of those ceremonies
Into
that we
stores,
usually
yes.
have at this time at ceased, and people are not shopping as they would, and people are trying to survive. So a lot of cocoa that ought to have been exported are still warehoused, and oil as well is not adding up the numbers for them. So due to this downfall, it shouldn't be surprising that Ghana, which is as well a commodity dependent economy, is taking such beating, and the outlook and the light in the tunnel is that going into 2021, there's the tide seems to switch with the recent development in vaccine. That's another upside to it. We've seen that a lot of manufacturing companies and a lot of chocolate makers have said that going into the first quarter of next year, production will pick up and demand will pick up, and this is just the light for them. And we hope that going into 2021, they will be able to jump out of that recession. Nigeria as well, due to our dependence on a lot of commodities.
Commodity export-oriented economies are in for a very hard time, whatever type of commodity you deal in: gold, diamonds, agri products, soft commodities, as the case may be. Let's touch on let's move to East Africa and this McKinsey report on the revenue of Kenyan banks, quite frightening, as well as the loan restructuring, which was likely to get worse. 2 days ago, we got a report that the total real estate loans being restructured by Kenyan banks is in the region of 148 billion shillings. That's quite huge. Then the FX reserves for Kenya down by 10% year to date, 7.85 billion US dollars. Nigeria is still at least way above that. KenGen is the government's is a prime energy producer in Kenya, listed on the Nairobi Securities Exchange, and says there will be further delay for his earnings until January 31st, 2021. We'll talk about it when we get it. COMESA, which is the community for East and Southern Africa economy, says the region, the growth there plunged by 0.6% in 2020. Joshua, these are the story from the banking sector in Kenya. It looks like this loan restructuring, the whole pandemic, is, whichever way we look at it, is not likely going to be an easy ride over into the near future.
Yes, absolutely. But I think this sort of highlights the big difference between the East African banking sector and the West African one, at least between Kenya and Nigeria. I think it's it's a very stark contrast if you look at the two, because they also engaged in some restructuring, but on some levels, due to the fact that their businesses are far more traditional, let's say, far more reliant on your traditional interest income, interest expense to give you, a large chunk of your profitability. Whereas in Nigeria, the true reality is that, fees and commissions and other non-banking operations are really, supporting Nigerian banks like a lot. If you were to, switch over, you would see that Nigerian banks would not be as profitable if not for the fees and commissions and the other non-banking operations that Nigerian banks are very, very good at and have been building up. And I think the reality of it is that this is born out of necessity due to the fact that in 2016 the banks were under a lot of pressure after the first oil price crash. So it just forced them to sort of start to think outside of the box, really. Now, if you look at the Eastern African market, they've not, had that same issue. And I think this is what is going to probably force a sort of changing in thinking or changing strategy going forward. But I mean, the expectation that it's going to last for 5 years, I don't know. I feel like because of the way banking in Africa is and because of the way the African economy as a whole is, these kinds of shocks are not going to be as long lasting as that, simply due to the fact that there's always going to be some sort of growth. There's always going to be some sort of recovery that's going to come out of this. Every time there is, a big dip, there will be some sort of innovation, whether it will be agricultural or whether it will be service related, whatever it would be. I feel like there will be some sort of rebound that will pop up that would sort of, boost their activities, boost their earnings, and sort of get them back into profitability a lot quicker than that. So I don't tend to agree that it will take 5 years to get to that level. Although of course it's a bit worrying.
I know the banks are like cats. They have 9 lives. Even when everything is going down, they have a way of surviving. Isn't it, Suleiman?
Yes, I agree with you. I mean, we always find our way out of it. There seems to be some innovation around, the current environment, and you find your way to wiggle out of it. You just got to land on your feet and get back up and get doing.
And get good. I guess it's all about how to survive in a very time period. But again, if the McKinsey says it's going to be 5 years, maybe that's a long-term view that can go maybe a year or two down the line, and that would work well for everyone. The Southern African market is where we're going next with the WEF Global Competitiveness Special Report. Of course, Nigeria's name did not feature in that report, by the way, when you talk about competitiveness ranking. But there are a few issues within that report in terms of recommendations on what to focus on. And one of the key areas that's been a problem in 2020, highlighted in that report, what you call the business costs of crime and violence, especially for emerging countries. Bravura Holdings is deferring its listing on the Nairobi Securities Exchange and the Mauritius Stock Exchange until 2021. In Zimbabwe, FBC Holdings is launching a mobile money. That's a financial services company, but the shareholders of Power Speed Electrical says there is no benefit of being listed on that stock exchange, so they have elected to delist voluntarily from the stock exchange in Harare. So when we talk about competitiveness and Nigeria, in particular, the business costs of crime and violence, Joshua, this is something we can relate to in Nigeria, isn't it?
Of course. Well, the truth is that if you look at the environment currently, you can see that sure, competition is rife across the board, across industries. But the truth is that if you have favor within the current government, to a certain extent, then you can sort of circumvent that competition and you can become sort of like a lone star player. Because you see, every industry or every organization that aligns itself with the government of the day, they always find themselves, riding out any kind of, peaks or troughs. They're pretty much steady in terms of, revenue. If you're able to just lock into a steady stream of revenue, that transcends any kind of economic cycle, then you're not going to even have to worry about competition. The only people who are really competing are the ones who are on the outside looking in, trying to feed off the scraps that you throw out to them. So I think, we're not really in what you would call a fully competitive environment, at least not in my mind, not realistically anyways. But I mean, that should not be the case. But overall, I think, unfortunately, due to the age of our democracy, the age of our economy, we're still not at the point where, free market forces completely dominate. Although I think if you look out globally, you'd see that there have been a lot of cases where you start to realize that, things are not maybe as fair as they appear to be, even in Western society. So, I think it's something that we all need to improve on that front, really.
Okay, so Suleiman, my point, thank you, Joshua. Suleiman, when we talk about crime and violence, that report highlighted that there's a business cost to it. So in terms of when you look at kidnapping, for example, you talk about the militants in Nigeria, this is one very sore point for the country that this WEF report highlighted.
Yes, I agree with you, Boston. If you look at the most problematic factors of doing business in Nigeria, crime and theft, as at the last report Nigeria featured was about the 12th or the 13th factor that it was impacting doing business. The most vital, they said, was inadequate infrastructure, corruption, access to finance, foreign regulations, foreign exchange regulations, policy instability, and all that. But to touch on the point on crime and theft, it is very pivotal to every business environment that the safety of the business owners and the business itself is assured. Because if you're not guaranteed of your safety, why are you doing business in the first place? Why are you opening an office in the first place? So it's a very big taint on the Nigerian economy and the Nigerian government if we do not have if we cannot secure the lives and property of not just citizens but inhabitants of every country, because it is a fundamental fundamental principle and a responsibility of the government, because the government, you agree with me, has the sole legitimate power to force, or sole legitimate power of force. So no one is allowed to raise such defenses to his properties or not, or his life, aside the government. So you cannot be carrying arms about in Nigeria. You cannot be carrying weapons about. So it's the government's sole responsibility to ensure that you are protected and your business is protected. And if that lacks, it will talk and speak into our FDIs, which has not been improving which has not been improving significantly over the period. And you can't, I'm not going to go to a country that is rife with violence and all sorts. That is why you see that the Northeast is one of the least developed regions in the country. And you see the South at some point was having something similar, where we saw the IOCs threatening to leave and all that. So it is not good for Nigeria. What happened in Lagos recently will also speak to foreign investors. We see what happened with SPA. SPA was just a bit, they were just a bit diplomatic, and probably they saw the turnover they were getting in Nigeria, and they decided, you know what, let's keep going with it. It is not a good image for any nation. You agree with me that while Libya is having the whole crisis, I do not think you get up and say, I'm going to set up a business in Libya. Or while Iraq is having their issues, I don't think you go and say, I'm setting up a business in Iraq tomorrow, because you're not even certain that you'll come out alive, talkless of making some profit for yourself and your business. So this is very paramount. And for we to move the economy ahead, for we to move businesses ahead, and for we to move the nation ahead, we need to tackle crime and theft, kidnapping, and all sort of insecurity add on in order for we to be that developed and nation that we anticipate.
ShopRite, of course, I'm sure, like you rightly put it, ShopRite is trying to rethink everything, but we just hope that we'll be able to keep those foreign investments that we have and be able to attract more. But this morning, a very close analyst and a friend of mine heading to Ibadan for a couple of days, and instead of going by road, he's got a car. He's headed to the airport and is going to fly Lagos to Ibadan, which is just which used to be a 30, 35, 40 minutes by road. And if you have a very, very good road, it should be less than 40 minutes. Now it's got to drive first to the airport and then fly down into Ibadan, to the airport, then from there start commuting to the city. So you can see the costs here, the business cost, for example. You just use a few liters of petrol. Now he's going to pay XYZ to get a return ticket and all of that, and then intercity transport when this was a journey. Now again, because of the kidnapping reported on that road now, and the whole lot of work being done there, and the accident that happened just I think yesterday or day before yesterday, as far as the construction that led to the fire incident because a pipeline was ruptured. This whole lot of mess there, by the way, if you're moving trucks or import or export from Lagos Street by the highway, now becomes a big problem for you. You're stuck, and that's adding to your costs. By the way, but let's say good news and say congratulations to Libya. As we finish off in North Africa yesterday, decided to hold their first meeting in 5 years. A new single official FX rate is out there, 4.48 dinars to the dollar. And the bank Al-Maghrib, which is the Morocco's central bank, yesterday kept its monetary policy rate for the last time in the year at 1.5%. Of course, the growth outlook was also caught. So, Joshua, this is a single official exchange rate, even in a place like Libya.
Well, see, okay, so the thing is this, regardless of, the economic challenges that the country is having right now, the truth is, a foreign investor that sees that and says, okay, they have one exchange rate, you get in, you get out, you know what the rate is going to be. There are no surprises. As dangerous as Libya is, I don't have to go there to make an investment or to exit my position and know that my investment is in quotes secure, right? So compare that to a country like Nigeria. Although our insecurity has gotten a lot worse, I don't think we're nearly as bad as Libya with regards to insecurity and unrest, civil unrest. But investors would be far less encouraged to bring their foreign investments to this country and say that they're going to even come in for 1 week and then exit, because the exit is not guaranteed. There's no assurance that they'll be able to get, source their FX. And what are they going to do? Are they going to come in at the official rate of 390, and then when they want to exit, they have to exit at 450 or 4, whatever the parallel market rate is? That's just making a loss for the country. So I mean, at the same time, we are hearing about round tripping through other foreign countries, through other African countries, in order to just take advantage of this parallel market. So it creates an environment that is not conducive for honest business, and is not going to bring in any kind of attractive investment. And the truth is, unfortunately, we're trying to do business, but it's the Western countries that are dictating the terms. If we were in full control, then we would say that this is the price that you're going to pay if you come into our country, and they would have no choice but to pay that price. But because they are the ones dictating the terms, they can tell you that we want you to unify your exchange rate. Just let go of the controls. Right? These controls that you're putting in place are only going to make things worse for you down the road. And we're anticipating that. So we're going to sit back and wait for things to actually get worse. And when they get worse, we make money. So they're betting on us failing. And unfortunately, that gives them no incentive to help us, because they're still betting on us failing. So the truth is, we're caught, it's a catch-22. There's nothing we can do about it. And the sooner the CBN realizes this, the better for all of us, because Egypt has done it. They came out. Truly, I understand that there will be some short-term hardships if the CBN were to announce tomorrow that they're no longer going to be controlling the exchange rates, and they will allow market forces to dictate. The dollar will skyrocket at first, but it will rebalance. It will moderate and reach its true value. Now, the way that the government can actually improve our exchange rates is to put in policies that will improve our balance of trade. If we were net exporters, then our currency would be getting stronger, not weaker. And the only way we can be net exporters is if we are able to competitively supply not just our neighbors, but China, India, Europe, the US, the UK. If we're able to supply them a quality product or quality products, consistently.
It's music to my ears, because there's if you look at Latin America, for example, if you look at the whole of Brazil, which is largely black populated, how come we don't have that pipeline of whatever? I don't know what we have with Brazil, for example, which we have a lot of affinity, because black to blacks in terms of taste and culture and what have you, and we can really harvest any FX from such a very highly black-dominated economy and country. It's a whole lot of worry out there. But like you said, we need that trade policy, balance of trade, so that we can get a balance of payment and exchange rate stable. And of course, we can just let the Naira go like a kite in the skies and find its true location. Thank you so much, Joshua Debisi. We appreciate your time this morning. Akintunde Sulaiman from Greenwich Merchant Bank. Thank you. We appreciate your time as well, and analysts coming through on our show. We appreciate both of you. Have a great day. And tomorrow is Friday. We'll see you again. Thank you very much, and bye for now, gentlemen.